Welcome to Exit Algorithms, the podcast where we decode what it really takes to scale, exit, and preserve the legacy of your business for the long term. Today, I'm joined by Steven Loewer, founder of Lion's Den Capital and Private Mortgage Mastery Academy. Steven teaches investors how to earn 8 to 18% returns by lending capital on real estate mortgages without having to deal with hassles of landlord issues. With $400 million in deals funded, he also helps business owners deploy exit proceeds into predictable monthly income streams. Today, we'll cover his journey from his first rental property to building a lending empire, strategies for passive income, and technology's role in scaling. Steven, so excited to have you here. Welcome to the podcast. I'd love to start off, if you don't mind, could you share a bit about your background, your story, and how you ended up full-time starting up? I think your first venture was probably Lion's Den Capital, right?
Yeah, my first real business venture that I've made something of. There's I think every entrepreneur has a couple of failed businesses along the way, and Alex Schmozy, I love, he says, if you think like the first thing you start is going to be the thing you do for like 10 or 20 years, you got a lot to learn. So but yeah, Lion's Den's been the main business for me. But yeah, I'd love to give you a bit of background. So I grew up in the prairies in Canada, in the just north of the Dakotas is a province called Saskatchewan. And I grew up in a little city called Saskatoon, and I'm one of 7 kids. I'm not even the middle child. I'm the 5th. And so my dad was a geologist. He always had a pretty good stable income, but raising 7 kids is tough and expensive. So my mom she grew up on a farm in Alberta and was very entrepreneurial. And so she would try to do all sorts of things to, try to keep us fed and clothed and in sports and activities and busy and stuff like that. So she found different ways to do that. She would import truckloads of fruit from British Columbia and sell it case by case to people out of our garage, for example. I'll give you another example. When they were really young and only had a few kids, my mom, they wanted to have some new flooring. They wanted some carpet, but couldn't afford to just get carpet. So she went around to a bunch of different flooring companies and asked for old carpet samples. And so, if you've ever seen like carpet samples, they've got like this rack of 6 or 10 different things you kind of look through, and they're just, 2 by 2 or something. Anyway, she got a bunch of these old ones and sewed them together and made a rug for the house. So
Nice.
very
Wow.
resourceful, right? So, I learned a lot from her. Eventually they got into real estate. They decided that buying some rental properties was going to be a good venture for them. And so I learned a little bit about, being a landlord. As a kid, we would go and paint fences, fix up properties, clean up after tenants, scrub carpets, all sorts of stuff. So that was kind of my first foray into the real estate world. My mom introduced me to Rich Dad, Poor Dad book, which I think most of us read and kind of like, learn some great lessons about, what an asset is and isn't.
Yeah.
And then I'll give you one more story about my mom because it leads into Lion's Den. So my mom was asked to do a family reunion for her family, her siblings, and they had quite a big family. And so she was looking around for resources for a book or something that she could read on, how do I throw a good family reunion? And she just couldn't find anything. And so after she had done the reunion, her and her sister decided, Joe, we should write a book about this and document what we did, what worked, recipes, how to make this fun and exciting and things like that. And so they decided to write this book. They called it Fun Family Reunions. And after they finished, they were looking for a publisher. And so looking and got denied at a number of places. And so my mom, being the entrepreneur, said, well, forget that. I'm just going to start my own publishing company. So she launched a publishing company called Lion's Den Publishing. And so in her honor, we named Lion's Den Capital after to remember her. So she passed away in 2004. So from cancer, a long time ago. But so try to memorialize her in all that we do, and try to instill that entrepreneurial and resourcefulness in everything that we do in the Lion's Den Capital. So
Yeah. Wow. That's awesome story.
Thank you.
Um,
And so in after I was lucky enough to buy my first, well, I'll give you another great example. My mom's quite intelligent. So she recognized that having 7 kids, she wasn't going to be able to afford to put everybody through university. And she never went to university. My dad was lucky enough to study geology, but she wanted all of us to have the opportunity to get an education. So she said, if I can't pay for everybody to get a college education, maybe I could at least help them buy their first property. And if I can help them buy their first property, they could, live in it while they're in school or rent it out, or it could be their first property when they get married. And they can, one day grow enough equity to use that to fund their schooling, etc. And so she endeavored to help each of us buy our first property. And so back in the late 90s, in Alberta specifically, you could assume a mortgage without qualifying. So basically, you could go in and take over the payments without having to go and requalify with the bank. And in the U.S., they call it taking a property subject to, where you
okay.
just take the deed and you don't advise the lender that you just say, oh, here's the payments, here's the new account the payments are coming from, and everybody's happy. So this was kind of unique, and I was lucky enough to find a house that somebody had just built. It was a brand new home. They tried living in it, didn't like the commute. It was out in the suburbs, and they said we'd love to get out of this thing. So I took it over, basically $10,000 down, and took over a $200,000 mortgage. So that was my first foray
Wow.
into real estate investment. So that was super fun. And then after going through school, I wanted to study. I was pretty good at numbers, so I studied business with a major in finance, and then was trying to figure out how to meld those two: my desire and interest in real estate, and my knowledge in finance. And so, eventually, that got me to real estate financing. And I trained under a number of guys that had done some private lending and had a fair bit of experience with that. And so I got introduced to that concept of, private loans and what is that, and um, we can talk about that later if you like. But um,
Yeah.
then then the credit crisis happened, and
Mhm.
so nobody was lending, nobody was borrowing, and they said, we can't really keep you around, but we'd like to introduce you to this fellow. He's an apartment building flipper. And so I got introduced to this small private equity firm that specialized in buying, fixing up, and selling apartment buildings. And that's really where I learned the real estate business and about private capital. So we would structure all sorts of creative financing deals with seller financing, seller carry notes, wrap mortgages, agreements for sale, novations, all sorts of different types of creative contracts. And then in 2015, I decided to launch my own company. That's when Lionsden's Capital started. So it's about 10 years ago.
Nice. Wow. Okay. Cool. So you did your first deal. You had to been
I was
nine,
19. Yeah.
19. Wow.
Yeah.
Okay.
Yeah.
Yeah. Neat.
And
That's
the only reason my parents were involved is because the guy that was signing over the deal, he's like, I don't feel super good about having a 19-year-old take over my mortgage. So mom and dad signed on it, but I fronted the down payment, and that was all that. I'll give you another really funny story. So I rented that property out, and the guy that rented it, he was in the process of building a nice big acreage property, and so he was pretty well off. And so he said, "Tell you what, I'll prepay 3 months of interest if you give me a little bit of a discount, or sorry, 3 months of rent payments if you give me a little bit of a discount on the rent." And so I said, "Sure, that sounds interesting." So damage deposit, I think, was about 1,400, and then the monthly rent was 1,400 each month. And it was supposed to be 1,500, so I gave him a little discount. And so he prepays these 3 months of rent payments plus the down payment plus the rental deposit, all in cash. And so I received this big wad of 50s, and I go down to the bank. Yeah, and I can't remember the number, but it was between 5 and 6,000. And I go down to the bank, and they've got this 19-year-old kid who's depositing a bunch of cash and 50s, and they're like, Where'd you get this money? We need to know where it came from. How'd you get it? Where did they get it? Like, they just, I think they thought I was dealing drugs or something. So
yeah.
anyway, so that was a funny experience. But
Yeah, absolutely. And so you kind of found your home in private lending. What did you like better about that versus sub to or Sorry, I don't know how I know it. So
Yeah.
too.
Yeah, so I think that there's a lot of opportunities in both areas. When you've been through the process of buying real estate and dealing with tenants, there's some amazing things about that business model, and there's also some challenges that people oftentimes get caught up with. One of the biggest challenges that we have in Canada, especially, is that after you buy one or two residential homes, single family homes, it's really tough to qualify to buy the next one. And so, one of the goals that I have is acquiring some real estate in the U.S., primarily multifamily property.
Mm,
And the reason for that is the building generally qualifies for the financing. It's not the person. So they're no longer looking at, does Steven Loewer have enough income to debt service this loan? They're now looking at, does the building qualify to debt service the loan? Um, and
got
then
it.
in the U.S., there's so many benefits to owning commercial real estate. I won't bore you with all the details, but there's 5 or 6 really good reasons why I would prefer to buy multifamily property in the U.S. versus in Canada. And so that's been part of our mission for the last 12 months, and going into 2026, we're looking forward to acquiring some buildings down there. So
Yeah. Oh, that's exciting.
mhm.
So you kind of you simultaneously are doing the thing while you're teaching the thing.
Yeah, so the private lending is a totally different animal. So the thing that I love about lending is that oftentimes, and this is really cool. So when a family or a person grows wealth, they do it through a number of different avenues, right? So good investing, building a business and exiting, um, through real estate, things like that. But oftentimes, as people slow down or their vision changes, or they get a little older, or they're trying to pivot, they often transition into being a lender in one way or another. So I'll give you a really good example. There's a family here in Canada called the Gramesians, and in the early '80s, I don't know the exact date, they built the biggest mall in North America in Edmonton, which is just 3 hours north of here. It's called the West Edmonton Mall. Huge indoor space. They've got an indoor water park, an indoor amusement park. This amazing mall, and then they went and built the Mall of America in Minnesota. So, you know, great family, really smart, building, developing, making all sorts of cash. But guess what? They realized, they're like, man, this is a lot of work. We should probably just like figure out some other way to like lend our money, or do something, because we borrowing money from the bank. They're sitting back doing nothing, and they're taking, a big chunk of our profit every year, or through the development, et cetera, et cetera. And so they actually created their own bank out of their investment returns, out of their investment funds and things like that. So in Canada, it's called People's Trust Company. But
Mm,
so that's an example where, oftentimes we'll see people, grow, earn income, get to a point where they're like, hey, it's too hard for us to, do this anymore. It's a lot of work and a lot of risk. Why don't we just pull back a little bit and become the bank and fund other projects? And so that's basically what we teach people in the Private Mortgage Mastery Academy is how to analyze a deal, how to underwrite it, how to look for the red flags, green light, red lights, and then how to basically make sure that that's secured, and the repayment, or what we call the exit strategy, is well laid out so that you know how you're getting your money back. And doing
mm.
that,
What's the
um,
timeline on that?
yeah. So most of the loans are generally short term. So we call that anywhere from 2 to 12 months, essentially. Most of our loans, I'd say, would end up being 6 to 12 months long. So it's a investor that's doing a buy, fix, and sell, right? So they're buying a property, they're fixing it up, and then they're selling it. So that's usually going to take them 3 to 6 months by the time they do the renovation, get it listed, find a buyer, gets closed, etc. We also in Canada do a lot of loans to homeowners that are just consolidating debt, maybe don't qualify for traditional financing for whatever reason, um, buying the next investment property, pulling equity out of one property to go and buy another property. So there's lots of different reasons why we do it, and so it's generally always a financial fix for a short term problem,
Mm,
and so they're looking for a short term solution that can be solved by, oh, we're going to buy this house, and then once we've moved in or settled in, then we're going to sell this other one. Okay, great. Well, that's a very easy exit strategy that we can see, and we know how we're going to get repaid. So that's essentially what we do. So the nice thing is when we teach people how to become the bank, is you can lend out your money, and the returns on that generally are going to be between about 8 and 18%, depending on, are you in first mortgage position or second mortgage position. the length of the term that you're lending it. Are you going to leave it fully open, or is it going to be closed, or is there a minimum amount of interest you need? And then on top of that, if you're doing all the work, you can generally also charge what's called points or a lender fee. And so a typical loan would be, say, 10 and 2. So a 10% interest rate and a 2% fee. And that would be
Okay.
and so, if that's loaned out over 12 months, that's a 12% annualized yield. Plus, you're receiving generally monthly interest only payments every single month. So your annualized return is actually higher than 12%. It's probably closer to 13 because you're compounding monthly. So pretty awesome returns, especially in the short term. I don't really know of any other secured investment where you can earn double digit returns in that short period of time. Can you invest in the stock market and make 10 to 12? Yeah.
Yeah,
But
that's what I was gonna ask.
over
Uh-huh.
time, right? So that's usually over a 5 to 10 year average because the market this year is -2, the next year it's +14, the next year it's, you know,
Yeah.
and so yeah, for the most part, we recommend that people have a diversified portfolio, that they invest in different assets. But one of the best ways to have some exposure to real estate, if you don't want to have the hassle of tenants, you don't want to have the hassle of repairs and water heaters blowing up and basements flooding and all sorts of fun things that happen with rental properties, than
Yeah.
becoming the lender. So one of the things I like to share with people is like, hey, did you ever have a tenant, let's say they had a clogged toilet, and you call up your bank and you're like, hey, Mr. Bank, hey, Chase Bank, that tenant that you've got a mortgage secured on, I need you to go and fix that toilet. No, the bank's good. What are you talking about? I'm just the lender, man. And so it's the same thing. So if you become the lender, you have the asset, you have the security, but you're not responsible for the tenants, you're not responsible for the repairs, you're not responsible for all that upkeep. And so that's the nice thing about when you become the bank is after you've advanced the funds, it's really a passive return. You're basically just collecting the money and then following up on the payout, and doing some quick math to confirm how much they owe you on payout date. So
Yeah. Yeah, that's awesome. Okay. Yeah, because I was thinking it sounds like, or I was gonna ask your take on what, the pros are over traditional investing, but
mhm.
it makes sense. The longer you have to wait longer to get a return,
Yeah,
especially that
and
high.
especially so somebody as well that's exited a business. So I'll give you an example. So my friend Doug, they sold their mechanic tire shop and took the assets from the sale of the property and the sale of the business, and basically said, we're retired now. What are we going to do with this, right? So if you put it in stocks, there's a few dividend stocks where you can get some regular payments, but they're looking for income, right? They want to be able to live off of the investment, not draw it down every year. And so
Mm,
there's not a lot of places as well where you can earn that regular income each month where you can live off of the investment. Whereas with private lending, most of our deals are structured where you're getting a monthly interest only payment each month. So they've invested in various mortgages, upwards of $4 million. And so they're collecting, usually around $40,000 a month right now. And that's a great income for them. And they're like, dang, I wish we would have known about this. We would have retired 10 years earlier. Right.
yeah. Oh, that's incredible.
Yeah.
Yeah. Great use case.
Hmm.
Yeah, businesses exit, they have a bunch of cash. In the US, we have the 1031 exchange. Uh, you familiar?
Yeah, you bet.
Do you have the same thing in Canada?
No,
Okay.
I wish. Yeah.
Yeah, so essentially you'd kick the tax can down the road. You don't pay any taxes on the
Right.
capital gains from the business sale. Could you do you, are there any similar advantages to that with private lending?
Um, no, I don't know of any specific tax advantages to private lending. Um, the One of the ways that is really beneficial in the U.S. for to a great way to become a private lender is to actually, when you go to sell a property, would be to carry financing. And so I'll give you an example. So let's say somebody's got a small warehouse where they run their business out of, and they've sold the business, and somebody's decided, oh, we're not gonna use that space. So now they've got this warehouse they need to sell. Let's say it's worth $1 million. And let's say that, back 10, 15 years ago when they bought it, they only bought it for 400,000, right? So if they sell it today for $1 million, they're going to have a $600,000 capital gains exposure. And so
Mhm.
in the US, one of the amazing things is if you carry financing, you only pay the capital gains on the amount of capital that you receive. And so if you decided, okay, we're going to sell this thing, and we're going to do it and carry seller financing. So you might say, we'll list it for 1.1 million because nobody has to go to the bank to qualify. So there's a benefit there. We can potentially ask for a higher purchase price or sale price. And we're going to sell it. We're going to ask for $100,000 or $150,000 down, and we're going to carry the balance over, let's say, 20 years or 10 years, or it might be amortized over 25 years, but with a 10-year balloon, for example.
Mm-hmm.
And so over those years, and let's say you carry it at a 6% interest rate, which would be super attractive for most buyers that go, oh, well, one, you're cheaper than the banks. Two, I don't have to go and qualify. And three, I don't have all the other hassles and concerns of, this isn't going to show up my credit report and blah, 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 blah. And so that's a great way to get a higher value on your asset when you go to sell it. And two, then you're really only paying the capital gains on one, the down payment on closing day, and two, every year, if it's amortized, then you would say, oh, we got paid down by principal of $50,000, so now we're paying the capital gains on that remaining 50. And so you're spreading out those capital gains over the next 10 or 20 years, whatever, however long you carry it. So huge benefit in the US. In Canada, we're only allowed to do that for 5 years.
Oh, I was gonna say, okay,
Yeah.
5 years is the limit.
Yeah. It's not technically 5 years. It's you can only defer paying 20% per year. So 20% for 5 years, that gets you to your 100. So you could, in theory, carry it longer, but you still have to pay you can only postpone the 20% each year.
Got it.
Yeah.
Wow. Okay. Interesting. Yeah. Are a lot of your students American or
Yeah, we've got a mixture of
Canadian,
both.
both?
Yeah.
Yeah.
So what we teach are general principles that apply no matter where you are, essentially. So we tell people, whether you're in Canada, whether you're in the US, in theory, in other places as well, we're talking about security, we're talking about legal documents, and then all the underwriting is essentially the same, right? It's can you so when we underwrite a deal, I'll give you quick examples. We look at the worst case scenario. So as banks, they have their own metrics on how they analyze risk. And because they're so diversified, they can say, well, we can take on a little bit more risk this way because we've got so many loans that the chance of all of those loans going sideways is a black swan event like
Mhm.
2008. And but when it comes to private lending, we have to be a little bit more conservative on our underwriting. And so most private lenders would consider themselves equity lenders. So if there's enough equity in the property, generally they'll lend on it if they like the asset. So I'll give you another example is, well, let's use that same warehouse example. So let's say that somebody says, hey, I've just started my mechanics company. I want to go and buy a $1 million warehouse to get things up and running. And I need to borrow some money to get this going. The bank's not going to approve me because I don't have any financials from the company yet to prove that I can make the payments. Will you lend on this? And so a lender could look at that and go, okay, let's say that I lend you 700,000, so 70% of the purchase price, and you're putting 30% down as your down payment. So a lender could look at that and say, is that a level that I'm comfortable at? So we would say, well, let's look at the worst case scenario. So let's say that, let's call the borrower Bob. Bob, the borrower, 6 months in, realizes that, he doesn't have any clue on how to get customers. He doesn't have any clue on how to actually fix vehicles well. He doesn't bill properly. And he's recognizing that, oh man, I'm going out of business pretty quick. And
Yeah.
let's look at worst case scenario is Bob just completely disappears. He gets abducted by aliens. Who knows where Bob went? And so nobody's there to pay the taxes. Nobody's there to pay the insurance. Nobody's there to pay the mortgage. And nobody's there to pay the utilities. And so the property's just vacant. Nobody's around. Nobody's answering phones, right? So this would be the worst case scenario.
Yeah.
We look at that and say, okay, what would be the process for us to liquidate the property or take the property back and sell it and get our capital back out? And so that's why we analyze every deal. And so we would say, at 70%, are we confident, depending on the state you're in, the province you're in, what the foreclosure laws are, and how quickly that process goes? If you're in California or Oregon, I think that the foreclosure laws timelines are pretty long and arduous, right? So we'd probably recommend not doing too much lending there. In Alberta, for example, a foreclosure like that would typically take between 6 and 18 months. And so we would say,
Mhm.
okay, well, let's walk through the worst case of, does that take 18 months? What does that look like? Are you confident you're going to get your money back? And they would go, no, at 70%, I'm not comfortable. Let's bring that down to 60% loan to value. And so that's how we generally start at analyzing a deal and saying, What's your comfort level? What's your risk tolerance?" And at the end of the day, we tell people, there's a chance you might end up owning this thing. So only lend on properties that you would potentially consider owning, or you would know what to do with if you had it, right? So a lot of people look at that and go, "Oh yeah, if, he's buying it for 1 million. If I foreclosed and I'd only loaned him 700,000, I know that I could rent this out for this amount, or I could fix it up, or I could move one of my businesses into it, or use it as, a garage for my Ferraris or whatever."
Yeah.
And find some other purpose for it. So sometimes you got to look at it as a business perspective, and say, well, what, if I needed to pivot, what things could I do with this property, and do I feel secured that I would either get my capital back or get it back eventually. So
Yeah.
that's how we
Definitely.
analyze deals. Yeah.
Okay. Yeah, that's helpful. Thanks for getting to a little bit of the mechanics of that. Yeah, I was going to ask a bit about kind of risk management and liens for on the property, first, second
Mhm.
mortgages. What does happen in if a deal goes sideways and you're a
Yeah, good
private
question.
lender?
So the private lenders basically have the exact same rights as the banks do. And so if you're secured on the property as with a mortgage or a deed of trust in the US, there's a bunch of states that use that. Um, each state and each county and different things are going to have a process, a legal process that you can affect to recoup the capital. So that's the whole purpose of a mortgage is technically just a fancy word for a loan that's secured on real property. And so when we're using a mortgage, that real property is the security, it is the asset. And so
Mm,
a big amount of the underwriting risk that we analyze is the marketability of that property. Is, if we had to, what's the worst case, and could we liquidate it to get our money back? Beyond that, of course, we're also looking at the borrower to confirm, does this borrower have, some decent assets? Do they have the ability to make the payments? And what is the exit strategy? So for a mechanic, it would be, I'm going to get my 6 months or 12 months of financials behind me, and then go to a credit union or a bank that's going to, give me a new loan, and I can pay you out. Or it
mm.
might be, oh, we've got two other rental properties that we're in the process of selling. And from the proceeds of those rental properties, we're going to use that to pay you out. Right. So there's a number of things. So we're looking at a good plan or an exit strategy that ideally is going to repay that loan within about 12 months.
Nice. Okay. Yeah. So you have a few scenarios. You can at least have a peace of mind, a plan to go with in the
You got it.
worst case.
Yeah.
Yeah. That's awesome. There's a lot of similarities I'm hearing, just hearing you talk. I'm in the business buying world, but there's so much crossover. Like one of the things you said about seller financing and the tax advantages of that
Hmm.
is exactly true in business. Yeah,
You bet.
dodging those capital gains and only paying them on a smaller portion, so it's actually less percentage as well that you pay to
Hmm.
the IRS.
You bet.
Um, it's interesting.
Yeah, we love creative finance for buying real estate, buying properties, buying vehicles, all sorts of things. So
Yeah. Yeah, I imagine took probably a while to get to have a mastery of all the material that you need to market to both American and Canadian audience in this space. I was going to ask, I would love to actually hear kind of how did that was the process of building a community. How did you get your first student?
yeah, good question. Um, so one of the things that I learned from one of my mentors, it's Dan Martell. I don't know if you know Dan.
Hmm.
Um, he says, before you spend a ton of time and money and energy building something, he's like, test it, like put it out to the world and see, like get a customer, get somebody, and then backfill and build what you promised to build, and ideally use the money that you receive from that customer to build it. So that's what we decided to do. We said, we've got this idea, we've got this concept of, we would like to teach people how to do this. One of my goals essentially, and visions that I have is to try to teach as many people as I can, and not just rich people. I want to teach everyday Canadians, Americans that have some investment capital, that don't know much about the stock market. They don't, they have an investment advisor that maybe says, oh, do this and do that, and then they're looking at their statements going, why am I earning like 2 and 4%? Like, this doesn't make any sense. So they want to take control. They want to be more involved in their investments. So I want to teach as many people as possible, and that's in the thousands, how
Yeah.
to do this, right? And so we looked at that and said, well, what's the best way for us to do that? Is that through a book? Is that through a community? Is that through some sort of a course? And we're still evolving this and growing the concept. So we said, well, let's try, a course where people can come in, they can join a community, they can learn the concepts. We'll give them all of the tools that we use. We'll give them the checklists. We'll give them the guidance on how to analyze a deal. And once they get through that, um, if they're interested, they can actually also join what we call our Orbit program. And so what they can do is actually work in the business as an apprentice, essentially. And so we'll send them a real live deal and say, all right, here's a deal, underwrite it, put it through the system, put it through the checks, put it through the checklists. And then we review it, we give them the feedback, and then we go through and process it. And then, of course, if they've done it properly and things like that, there's also an opportunity for them to just earn a bonus if the deal actually funds. So that's one thing that we've done. And so getting our first customer
Cool.
was essentially just putting that out to the world, saying, "Hey, I'm part of a couple different real estate investment communities. This is something that we're doing. We'd love to do a beta test, and so we think that the course would be priced here. But for our first few customers that we're going to put through it, we're going to heavily discount that to looking for feedback, looking for um, testimonial at the end, ideally, and but really looking for that feedback of the course is too heavy in this area and not heavy enough in this area, or I'd really like more, you know. So just looking for that type of feedback, so we could custom make it. So that the challenge that I have is that I've been doing it for so long that I forget what I didn't know. Right. So I don't remember what it was like to be the newbie that didn't know anything. So I talk about a lot of this stuff with, a lot of acronyms, a lot of all these things. And you're a business plan guy, so I can tell you get most of it. But for the average person that's, never done a private loan before or seen it or talked about it, LTV and DSCR and all these things are probably, foreign concepts. They'd be like, "Ah." So we basically
Balloon
start.
payments. Yeah.
Exactly. So we start with foundations that explain a lot of the basics, and then we just build upon that and build until we get more advanced. And even, what we recognize is at the end of that course, it's really the goal is to help somebody get into their first deal. It's not an advanced course. It's not talking about commercial property underwriting. It's not analyzing financials. It's really based on, what do we look for in a deal in a typical single family home, a buy, fix, and sell, things like that. And yeah, we've had a number of people come through, and we've got some great feedback, and the testimonials that we've got have been great as well. So we're again making a second iteration of it now. So we've recognized that we may have been too information heavy and not enough guidance heavy, and so
Mm.
that's more of what we're going to try to do is more regular touch points where we're guiding them through. Okay, this is what you need to do next in your process. This is what you need to do next. And so that's what we're in the process of revising right now. So that's pretty fun.
Yeah. Exciting.
Yeah.
You get to see the real impact actually help people. I love that. Yeah. That's great advice to start out with that minimum viable product, test it, and then iterate based on the customer's feedback.
Yeah, exactly. And one of the things that's interesting too, and that a lot of people don't know, is when it comes to investment funds, is there's a bunch of different funds that you can use to fund these things. So some companies have excess cash, and they're like, we've got 200 grand sitting in the business account. We don't really have any plans for it. What can we do with this? So we have a number of investors that lend out that type of capital from their corp. Personal cash and savings, but also the big one for us is retirement accounts. So in Canada, it's RSPs, TFSAs. In the US, it would be self-directed LIRAs and IRAs. And basically any type of self-directed investment account you can lend out. And so for a lot of people, they're like, oh, I've tried the stock market, or it's in some sort of high interest savings account earning 3 and 4% or whatever. And so when we teach them about this, like, oh man, I can earn 12% returns on this money, and so do you know the rule of 72? I'm sure.
Yeah.
Yeah.
Can you explain for
Yeah,
everyone
sure.
though?
So the rule of 72 is basically this easy mathematical equation that if you take your interest rate and divide it into 72, that'll generally tell you how many years it'll take for your money to double. And so if you're doing a 7% interest rate, for example, your money should double about every 7.2 years. But if you do like a 10% interest rate, your money's going to double in every 7 years. And so sorry, did I get that backwards? 10, 7. Oh, sorry. If you're investing at 7, it'll take about 10 years, 10.2 years.
Yes.
I'm bad
Yeah.
at math. Then if you're investing at 10%, it'll take about 7.2 years. And so if I'm not very good at math, but let's say you're doing it at 35% interest, your money will double every 2 years. Right.
Nice.
So what's really interesting is when you get into this, and we don't promote this, we don't advertise this, because the returns that you can actually get within private lending can be quite substantial. And when people hear about 20% returns and things like that, they start going, "Oh, this is hokey. This is too good to be true," and things like that. So I started off with $44,000 in my investment account, in my retirement savings account in Canada, and I've now grown that to just about $200,000 within 5 years. And
Not
so, yeah, my annualized return, I think, is somewhere around 28% or something. And so it's important for people to understand that while we, say, 8 to 18%, there's an opportunity to do much more than that. Like I said, we don't advertise that and we don't promote that because most people just think it's too funky or wonky or it's some sort of scheme, right?
yeah.
So we just say
No,
8 to 18 is, that's the target return. And everybody has different risk tolerances as well. And so somebody that's, in retirement or nearing retirement, we obviously wouldn't advise them to get into, second mortgages and higher risk loans. We would say, yeah, stick to the 8 to 10% returns. That's going to be a good place for you. So
nice. Yeah, and it's better to, you know, uh, under promise, over deliver, right? Typically.
exactly. Yeah, you got it.
Yeah. Oh, that's exciting. Yeah, I wanted to, this podcast has a big tech AI focus.
Mhm.
Wanted to hear your take on, how are you using AI in the private lending world and teaching students to use AI? I imagine like underwriting, especially a lot of processes probably you use it to supplement versus hiring a lawyer to draft some documents and things like that. I'd love to hear your take on that.
Yeah, good question. So when it comes to lawyers and legal documents, we highly recommend everybody, depending on the locale that you are, is talk to a good lawyer or attorney that knows and understands the private lending world, and know and understand the regulations, the paperwork, the process. One of the big red flags that we have is never fund a loan and pay the person directly. It's always got to go through escrow. It's got to go through some trust account or an attorney. Um, and so I'd love to be able to use AI and bypass the cost of a lawyer, but we highly recommend against that. Just for all the different, fraud and checkpoints. We've seen some crazy stuff over the years. But when it comes to underwriting, yeah, definitely one of the things we love is, we usually get a document package, which includes, an application, sometimes credit reports, an appraisal on the property, identification and things like that. And so through our systems and process, we would, enter and verify that information, but we'll do a double check with AI to say, review this and look for anything that's, inconsistent, errors. Is there anything weird where somebody's fraudulently created, an identity document that has the wrong province or state, or something that just is out of whack. So, um, and then we also like to use it when we're doing our calculations for payouts. We can do that manually, but having the computer do that much quicker is a lot of fun.
Sure.
And then we're also just in the business process area. We're developing our I through the growth of Lions Den. I kept things very small on purpose for a long time, thinking that was a really smart thing to do. Anyway, over the last couple of years, I recognized that, hey, if I want to grow this and grow myself and become a leader, I need to be able to grow a team and develop processes and things. So over the last 18 months, we've really jumped. We basically went from a 2-person team to a 6-person team. And so for me,
Nice.
that's been a big development in saying, wow, we can't just have everything in Steven's head. We need documented processes and systems and a CRM and things like that. And so as we grow and develop each of those systems, we're recognizing different areas where we can use AI. So we're looking at, AI chatbot for the website, for social media contacts. We're looking at, do we implement some sort of a AI responder, things like that. So that's a few areas that we're investigating and looking into AI.
Yeah, absolutely. Good use case. Yeah, you need to be heard, right, to gain traction on any business. Success doesn't live within obscurity,
Yeah, exactly. You got it.
and AI is a super powerful tool to just you can easily now post perhaps every day or whatever your goal is or more. You which would have taken hours and hours now can be done in much less time.
You bet. Yeah, so we're using AI for, to help us come up with content ideas, content scripts. Um,
Nice.
we also, I'll just chat with AI as a a business advisor and say, hey, if I'm looking at expanding into the U.S. on this, what things should I be looking at first? And just using that as a uh, brainstorming session, it's been super helpful, and things that you just didn't even think about. It's like, oh, don't forget to think about this. I'm like, oh yeah, of course. So yeah, it's
Yeah,
been great.
absolutely. Yeah, I know. I watched a video, actually, a YouTube video from Dan Martell on, just training, like using AI properly
Hmm.
and training it to know you and to talk like you. Um, it's fascinating, like what we're, you know, if you just use it as like a Google search engine, you're not going to get, much out of it compared to if you really take the time to tell it to ask you questions to get to know you and then you can have that PDF document and upload it and give it context and
Hmm.
um,
Yeah, so that's one thing that one of my coaches actually gave me was a business context prompt. And
mm,
so we've built out a custom GPT now that's within chat that basically has all the knowledge and background and understanding of what our business is. And so now we use that business context prompt, and I can plug that. It's just a PDF document now, so I can upload that to
nice.
any AI now, and they'll just say, "Oh, great! Now I know exactly the context of what you're doing, where you are, where you're at, how many employees you have, all that stuff, what your goals and missions are, etc." And so now when it's giving responses, it's trained on, okay, I know exactly what I'm responding to, not just what do you think I should do now? Like, so yeah,
Yeah,
that's super helpful. There's been a few actually good custom GT prompts or custom AIs that I've received. Alex Ramosi's got a really good one that I've enjoyed because his his sales scripts and sales processes and stuff have been bang on. So we've been busy revamping some of our stuff with using his. So that's been a lot of fun.
cool. Is that the one you got from the book launch?
Yeah, yeah, exactly.
Nice.
Yeah,
Yeah,
and it's funny. I let it sit dormant for a few months, and then I was like, "Oh yeah, I've got this thing," and I started asking him some questions. I was like, "Dang, this is so good!" It's like Alex is here, like literally, like giving me custom ideas on consulting on my business. So it's been great.
it's awesome. Yeah. Where do you, I know we're going to wrap up soon here. I would love to hear your thoughts on where you see AI technology affecting your space in the next, even 10 years.
Yeah, that's a great question. Um, I'm seeing, you know, I like to think of myself as pretty with it and up to date, but I've seen other players in my space just like soar past me. And I'm like, dang, where did that guy come from? Like, and so I can imagine that it's going to be disruptive, not necessarily for the entire industry, but I think that smaller players or people will just be able to jump in and skyrocket themselves into any position that they want to be in if they're using it correctly and surpassing what some of the maybe dinosaurs aren't doing. Um, so I don't know exactly what that looks like, but I can envision where you know, um, like I said, somebody's able to just get more business, get noticed, grow exponentially. Where in the past that would be very difficult. We're using AI and finding those right concepts, ideas, and getting out there would help them do that. So
Yeah. Yeah, I agree. And that, yeah, it's in improving at just such a rapid race, like a pace. It's like Moore's law, but even more expedient. It's crazy. I was talking to a gentleman that built an agent that basically does exactly what you were just saying,
Mm.
and it's already kind of here. It'll work while you're sleeping and just contact people and send emails and very hyper specific to that individual, the copy and everything. It's crazy.
Yeah, very cool. The AI agents is one that I've like started to just toy with the idea and start to look into it, but it just I haven't quite got the grasp of it yet. So that one's still one that I'm working through. But if you have any resources that you'd recommend, I'd love to shoot me an email. I'd love that. But I also wanted to just make sure I'm adding a lot of value to your listeners. So we have a private mortgage starter kit that basically kind of explains all the things that we talked about in a really
Nice.
simple, straightforward manner. And so if people are interested, they just reach out to me and just send me the message, the word Pete. So you can find me on Instagram, and it's just at Steven Loewer. And yeah, shoot me the word Pete, and I'll send you our starter kit, and then I'll make sure that I know of all the amazing listeners that came from Pete's show. So
Awesome. Yeah, that sounds good. I'll definitely leave that in the show notes.
perfect, appreciate it.
Yeah, no, it's been a great conversation. A lot of takeaways. I think I need to reevaluate my IRA now.
Absolutely, yeah. When I talk to people and share it with them, that's the first thing they go is like, "Oh, yeah, I've got X amount of dollars kind of sitting, not really doing anything super awesome. I wonder if I could get that working, earning 8 to 18%. So yeah, we'd happy to help you guide you along the path.
Awesome.
All right,
Great. Well, thank you so much for your time today, Stephen. I'll
yeah, thanks for having me.
definitely be in touch.
You bet. All right, thanks, Pete.